Welcome back. Well, the outlook for the capital goods sector in Q3 reflects a mixed picture. Vamakshi joins us to help us out with more details on that and the broad expectations. Vama?
Well, absolutely, Nigel. With last year's state and central elections, government ordering activity naturally moderated, and that was widely anticipated. The private sector too saw tepid Capex with growth limited to select emerging segments. That said, the strong existing order books continue to provide healthy revenue visibility. On top of that, with key input costs staying manageable, companies focusing on high margin areas and operating leverage kicking in, margins are likely to remain elevated. Now let's dive into company-specific expectations. Nomura projects a 13% year-on-year uptick in ABB's order inflows. Revenue growth is expected at 14%, driven by robotics and motion and electrification segments. Margins could expand by 270 basis points, with net profit surging by almost 36% year-on-year. For Siemens, order inflows are estimated at 6,500 crores this quarter, with revenue growth of 12% driven by an execution ramp-up in energy, smart infrastructure and mobility. Margins are expected to expand by nearly 93 basis points and net profit may grow by 16.4%. The demerger status of Siemens' energy business will also be a key focus area. For Cummins, revenue is expected to grow by almost 10% on a high base, while EBITDA margins might contract year-on-year, and that is mainly on account of higher data center volumes in Q3 of last year. Exports are anticipated to see an uptick on a lower base, and key factors to monitor this time around will be the commentary on export demand, CBCP 4+ sales and pricing trends. Ordering activity for Thermax is also likely to rise 31% year-on-year to 3,290 crores, with revenue expected to grow at 16%, accompanied by a 130 basis point margin expansion. However, net profit is projected to decline by 24% due to an exceptional gain in the same quarter last year. Now, as far as Hitachi Energy is concerned, a significant highlight this time around is the anticipated HVDC order from Power Grid, with order inflows projected at 6,800 crores, a whopping 450% year-on-year increase. Revenue is expected to grow by 29%, margins by 321 basis points, and net profit is expected to triple. Reporting results later today, BHEL is expected to post a 28% growth in its revenue, driven by power and industrial segment. Ordering activity is likely to remain strong, with a 658 basis points improvement in margins. The company is projected to swing to a net profit of 175 crores compared to a net loss of 163 crores in the same period last year. So that is how the numbers are expected to pan out this time around. But what about valuations? Well, stocks have dipped in tandem with the overall market sentiment, and with that, the valuations, as you can see, have corrected substantially from their peaks in 2024. That said, brokerages are bullish on selective counters. Nomura's top picks include CG Power and GE Vernova T&D, while IIFL Capital prefers names like Cummins, ABB, Siemens and CG Power. Now, looking ahead, all eyes will be on the government's Capex plans in the upcoming union budget. The Capex momentum, both from the government as well as the private sector, will be critical, along with commentary on competitive intensity and pricing power.
Right, Vamakshi, thank you so much for putting that into perspective for all of us. The expectations from not just this quarter, but also from the government in the budget and private sector Capex as well. We have Mr. Anwani joining in from Prabhudas Lilladher to discuss how the sector has fared as well. Thanks a lot for joining in. You know, Vamakshi has laid the foundation for all of us out here. The question isn't about how much the government will, earmark in terms of Capex, but how much they will deploy. From the year so far, how much do you think has been deployed of the amount that was earlier earmarked? And in light of that, what's the prognosis for these stocks which have seen a bit of a correction from the top?
Right. Thanks for having me. So I think with respect to Capex, as we have been hearing because of the elections this year, till November, what we understand, kind of 50-60%, 50-55% Capex is deployed across defense, power. And we are hearing from the railway documents that the railway ministry has deployed almost 75% of Capex. So I think the Capex this year was expected to be back-ended, though there was a slight 2-3% cut which can happen with respect to growth in Capex, which was there. For this year, we were expecting 11 lakh crore of capex, which can move slightly here and there. But having said that, I think for the next financial year as well, I think the key segments like power, railways, defense definitely will be in focus where there should be more budget earmarked. And interestingly, in power, we want to integrate the renewables where with the objective by FY32 is to go 850, 900 gigawatt, out of which 50% should be renewable. So I think if you see all the long-term vision documents of government, we see definitely the capex continuing in the key sectors. And this year, it could be 2-3% miss, which can be possible, broadly speaking. Yeah.
Okay, all right. Hi, Amit. Good to see you. And so 10.7 lakh crore, approximately 10.6, 10.7 lakh crore approximately could be the number that we should be working with. On that pace, what is the number you'll be satisfied with for the next year?
I think between 8 to 10% on the revised base, definitely we can see capex earmarked for FY26 as well. And as we have been seeing, there's a very strong uptick in the T&D capex. We saw a couple of HVDC orders getting awarded in past 2 months. If you see, despite the slowness, we saw the very large order getting awarded of 45,000 in thermal power, which L&T and BHEL won. So we are seeing there are pockets where the projects are getting cleared in past 2-3 months versus the first half of this financial year. And we expect that especially defense, a lot of orders get cleared in Jan, Feb, and we are expecting
got it. Amit, very quickly, a little short on time. Top picks, give and take everything, slowdown, valuations, margins, the way the stocks have run up. Top 2-3 picks?
Yeah, so I think we are betting on Cummins India, which is our top picks, despite we are building in 11% growth this quarter. I expect that the export is likely to rebound now, and the industrials business is also coming back, and the CPCB transition is kind of settling down. There's a lot of scope for growth and leverage still continuing. The stock is trading at 2,700. We have a target price of almost 4,100 rupees. Second, I think Voltamp, where the valuations have corrected significantly, seeing the macro tailwinds in power T&D space, I think Voltamp is a preferred transformer player catering to industrial transformers and now setting up capacity in power transformers. I think the valuations have corrected significantly, and this is our topic. In defense, Bharat Electronics at 265 definitely can be looked at, seeing the kind of pipeline which we have been discussing in defense, which is still yeah.
Okay, Amit, Cummins, Voltamp and BEL, and you're talking about 265. In fact, as we had this conversation, it became 255. That's the kind of state of the market we are in. But there are picks out there that various people like, and you have stated them out for us. Thanks a lot for joining in and filling us in with all of those details. But we've completely run out of time on this edition of Chartbusters. Stay with us. Trading Hour comes up next.